Greetings, everyone. This is Bob Kramer giving you your February economic update with financial partners. So we're starting the new year. January is come and gone. And one of the things I like to share with people is a little book called the Stock Market Almanac. And every year, whether it come out in the electronic or paper form, the almanac does give stock market data, and it goes way back to 1950. Since 1950, if the stock market performed favorably in January, there is a 733% chance that the stock market, the balance of the year, will also be favorable. So here we had a good year, a good month in January. The market was a positive 1.5%, and over the course of the last 70 years plus, that market barometer is right about 3 out of 4 times. If you batted 733 as a baseball player, you would be in the Hall of Fame for sure if you did that over a long period of time. So we're really looking at a good start to the new year and optimism among investors. We like to look at 2 different factors when we look at projections of the stock market performance. The first is valuation. Valuation is commonly using a PE ratio, or price to earnings ratio. And the stock market of the S&P 500, which are the large stocks, that PE ratio is around 23 or 24. Now that number is kind of pricey right now. The PE ratio of smaller stocks, which usually comprise the Russell 2000, is only about 16 or 18. So smaller and mid-sized stocks look a little more price friendly. But I also want to include what earnings projections are looking at. So PE ratio, that is the cost that you pay for those stocks, for the price to earnings ratio. The earnings estimate last year of 2025 was around 13% estimate. 13% is pretty good for a growth over the previous year. In 2026, the same company projected an 18% estimate for 2026. How did they make those estimates? Well, corporations are making money right now. The consumer spending is way up, and consumer spending comprises about 70% of the stock market performance. So interest rates right now are pretty favorable, around 3.5 to 3.75 on the Fed rate. We also are welcoming the May meeting of the Fed. The Fed is projected, or they are naming Kevin Warsh, an ex-Fed governor, as his role of the next Fed chairman, replacing Jerome Powell. He is in Trump's camp as far as economic favoritism of lowering interest rates, and we do think that if he is named, which is by all indication, we'll probably have a lower interest rate environment throughout 2026 and in the years thereafter. So things are looking pretty bullish right now in the stock market. Always, before you make any investment, talk with your investment advisor and make sure that you have the now and the soon buckets filled up before investing in anything that is volatile like stock market investments. This is Bob Kramer signing off. Hope you have a great February, and make sure you take care of your sweetie on Valentine's Day coming up. Take care and look forward to talking with you soon. Bye-bye.